Welcome to The Explainer. Today we're going to break down one single number that has a huge impact on millions of home loans all across the country, and you guessed it, it's changing for 2026.
So let's jump right in. We're talking about a number that kind of quietly shapes the entire housing market. It directly impacts what kind of mortgage you can get, and for 2026, it is on the move again.
Okay, but before we can get to the new, shiny 2026 numbers, we first have to get on the same page about a really key concept, the conforming loan.
To put it simply, it's the size limit for a standard mortgage. Every year, the Federal Housing Finance Agency sets this number. It's basically the biggest loan that government-backed giants, Fannie Mae and Freddie Mac, are willing to buy from lenders. This whole system is what helps keep money flowing in the mortgage market. So this limit creates two main buckets for loans. Think of a conforming loan as kind of like a standard package. It's easy to handle, it's common, and it usually gets you a better interest rate. But anything that goes over that limit, well, that's a jumbo loan. That's the oversized package that needs special treatment, which usually means stricter requirements and, yep, a higher interest rate for you.
All right, so now that we know the rules of the game, let's get to the main event, the big news for 2026. And as you probably figured, that limit is going up.
To really appreciate where we're going, we've got to look at where we've been. For the last year, the limit for most of the country has been
Just a little over $806,000. That was the magic number, the line in the sand between a standard loan and a jumbo one.
But because home prices have just kept on climbing, the Federal Housing Finance Agency had to go and adjust that number up once again for 2026. The increase this time is $26,250. Now, you should know this is actually the smallest yearly jump we've seen since 2020, but hey, it's still some much-needed breathing room for homebuyers.
And all of that brings the new baseline, the number everyone in the mortgage world is going to be watching, to a grand total of
$832,750. So there you have it. That's the new standard for a single-family home in most of the U.S.
But this isn't just some random number. It actually tells the story of the U.S. housing market's wild roller coaster ride over the past 15 years or so.
Just look at this. After the 2008 crash, the limit was just frozen solid at $417,000 for nearly a decade. Then, as the market started to heal, it began to creep up. And then came the pandemic, which led to a massive surge, a record-breaking jump of almost $100,000 in 2022 alone. This latest increase for 2026, it shows a market that's still growing for sure, but maybe cooling off from that absolute fever pitch.
Okay, so that's the history lesson, but what does this new number actually mean for you if you're out there trying to buy a house?
Well, first thing to know is that this limit is definitely not one size fits all. That baseline is now over $832,000, sure, but in those really expensive markets, think parts of California or the New York City area, the ceiling gets jacked way up to almost $1.25 million.
So who's really winning here? Well, this is a huge deal for buyers in those moderately pricey areas, where house prices are kind of hovering just a little bit above that old limit. This bump lets them stay in that easier-to-get conforming loan category and avoid all the extra hoops you have to jump through for a jumbo loan. It's also kind of cool to see that it validates lenders like Rocket Mortgage who actually saw this coming and started offering higher limits to their customers weeks before it was even official.
But the numbers game doesn't stop there. It gets even more interesting when you look beyond just a typical single-family house, because the limits get higher if you're buying a multi-unit property.
You can really see how the system is set up to encourage people to invest in multifamily housing. The loan limit scales up big time. We're talking over $1 million for a duplex and all the way up to $1.6 million for a 4-unit building in most of the country. And of course, it goes even higher in those super expensive metro areas.
And finally, you've got these really special cases for places with totally unique market situations. We're looking at Alaska, Hawaii, Guam, and the U.S. Virgin Islands. I mean, get this, their baseline limit starts where other high-cost areas top out, and their ceiling can go all the way up to over $1.8 million. Wow.
So, as we wrap all this up, I want to leave you with one final thought. We see these limits going up to keep pace with a really expensive housing market. But here's the question. By making it easier for people to borrow more money, are these rising limits also playing a role in pushing those home prices even higher? It's a classic chicken and egg problem, and it's right at the heart of the American housing market today.